Hello, Theta Daddies. Welcome to another video where we're going to be talking about something that's probably on a lot of people's mind when we talk about buying options or selling options. And of course, being a Theta Daddy, we are almost always talking about selling options. So I thought it might be interesting to talk through a little bit how I go about picking what options I like. And there's a few things that are involved with this, of course. But number one is, what's the watch list look like right now? And this is a blinding screen. We need dark mode. Google Finance, come on now. I'm gonna have to go to Yahoo or something to stop blinding people. But, in the case of selling covered calls, typically you want stocks that you own to be doing pretty well. So, like right now, I own Reddit, and if it weren't earnings this week, at the time of making this video, I would probably be looking at selling covered calls here if I didn't already have any. Rivian's another one, which I did have covered calls on. Actually, I had cash secured puts that went so far out of the money that I just got full profit out of them. SoFi, another good one, right? And this is just my watch list that right now what it's at. It changes somewhat regularly, as probably yours does too, I would imagine. But as we look at the other side of the equation, what do we see? Well, number one, there's some big names here that I like. Number one, probably to everybody, would be Nvidia. We've got Hood down a little bit, but not that much. But Nvidia is kind of an interesting one. So we're going to take a quick look at just the last month of action here and see that, okay, we're in a range between 95 and 115. That is a range. Holy cow. If we go back out a little bit further, you can see that that range is very much coordinated with the market drop that we had in general, right? As an example, I can compare to SPY. And yeah, you can just see that, like, okay, these drops here and here, very much correlated. Not sure they mean too much. So I'm not necessarily worried that they're going to drop back down to 90 unless the market itself drops back down like it did at that same time period, which certainly could happen. Who knows in this economy right now that we're in? But this is just kind of a starting point for where do we think we'll be trading in. Now, once we get past those couple of data points, I like to look at the Robinhood Legend. Is a fantastic setup. You could use TradingView, of course. That's a very popular one. But for me, I like to look at Legend most recently. And we're going to bring up, I got SPY up now, but we're going to look at NVIDIA and say, okay, we're in an interesting spot over here. What do we do with this information? How do we decide what we want to work with? Well, based on where we've been in the recent past, I've been selling cash secured puts and buying shares and then selling covered calls very successfully in the 105 range. It seems to be I'm not sure I would call it a resistance level, although it looks like we're not too far from that. But it's definitely a point that we seem to continue going back to. Let me change this from the 5-minute view here to the 1 day. And we can get a little bit of a better look here in Robinhood Legend. We'll look at the 3-month and say, 105 does put us kind of smack dab in the middle of this flag pattern that we've got here. Now, I will say this. I am not a huge TA guy personally. I think TA has a place. I don't use it to purely make decisions off of. I look at it as TA is essentially a sentiment prediction tool, or at least that's why people use it. They're trying to see what the population of the market participants feel or are going to feel based on what the psychology comes out on the chart as, by using recognizable patterns that are real because they're recurring in human psychology or market psychology, right? That was a very ethereal type of explanation of why, because of that, you can't really use it. You can use it. It's hard to use it effectively, consistently, because it is no predictor of what will happen. It just says this pattern has happened before, and it could look like this if it continues, or it could do something completely different. And then you're hosed, right? So it's another data point, and we do want to think about it like that. And at least that's how I like to look at it. So in the case of NVIDIA, certainly you could say like, there's a resistance level, strong resistance here at 86. Yeah, I don't think we're ever going back below there. Another strong resistance that coincided with that market drop that, again, I don't really think we're going to go there. To be honest, I think we're just in a sideways trading pattern until tariffs are resolved, especially with China. And I think we're going to oscillate in this range. So in my mind, I'm not upset if I were to own NVIDIA at $105 a share. Can you wait for a better entry? Sure, but that's not really what we're trying to do here. We're trying to, as option sellers, deploy our capital in a way that generates the best cash return that we can get. That's it. To be honest, I don't really care what NVIDIA does. It doesn't matter to me unless I'm currently holding a covered call or something. Otherwise, I really don't care because that's not the business that I'm in. I'm in the business of deploying my cash, my capital, to generate the best return that I can. And I think NVIDIA is a good place to do that. Not financial advice. Do your own due diligence. I'm just sharing my thought process from my personal take on things. So if we were to look at NVIDIA at that 105 range, like I was just saying, keep in mind we're on a red day. So I'm not looking to sell covered calls. If I was looking to do that, I would probably buy shares and then sell covered calls on them. However, I'm really, again, just looking for that nice percent return on my capital. So when I look at NVIDIA here, I see that, okay, the 105 range, I can sell on May 2nd, which is Friday, as an expiration date. I can sell 105 CSPs for $1.63. It just changed, $1.64. It's getting better, right? So I'm going to start thinking about this as a percent return. And to do that, we're going to break out the really fancy calculator that comes with Windows. And it's not even Windows 11. I don't know. Maybe they have a fancier calculator. And we can real simply see that if I were to sell that right now for now $1.65 at $107 a share point, we're just going to pick 35 times 100 shares because that is the size of a contract. Certainly, we are going to put up $10,000 and $10,735 in order to make this trade. Now, what would our return be? Well, I hit that twice. That was pointless. If we were to look at the premium, which was, I think, 165 when it was at 107.35, right? So we're going to use that just as some way to get a modulator of sorts. I made up that word. The return is going to be $1.65 per share based on the contract price times 100 shares for the contract, which is $165. I bet you were able to do that in your head. Me too. But I just wanted to go through it in case you're wondering the actual mechanics of exactly how you figure this out. So $1.65, now 165, divided by 10,735 gives you 1.5% return on our capital. Now, here's the real question. Is that good? And the answer is pretty good. Because we're not really caring about the individual percentage gain of this one trade over the 4-day time period. We now have to extrapolate that out to a year or an APR, annual percent return. This is the only way that I know how to keep things apples to apples. And so we always bring it back to an APR to make sure that we have a good, solid, foundational, true north of, is this a good trade or not? And the fact is, this is a 4-day trade, 4 days to expiration, right? You could do 5 days because whatever, I guess, if you want. It makes your trade slightly more conservative, I guess, your percent. It honestly doesn't matter. Just stay consistent with whatever you do. But because it's 4 days and we know there's 240 trading days in a year, give or take, that would give us 60 is the number of intervals that this trade would have. And this sounds a little technical. I get it. It's math. Sorry. But real simply, 4 goes into 240 60 times, right? So that's what we're going to do to normalize this. We're going to multiply this number by 60. And now we say that, whoa, annually, this is a 92% return on our trade. That sounds pretty good. And now, the best part about this is the shorter the term, meaning dailies, weeklies, monthlies in terms of expiration, generally the better benefit you get from theta strategies. Now, in the case of NVIDIA here, I don't mind owning the stock. Now, this is another key. In fact, I would say I like owning the stock. I don't care what the stock does, but I believe in the stock long term enough to continue to stay at the top of their game with what they're doing. And so if I end up being assigned the shares because the CSP goes into the money, totally cool. I'll keep it and I'll sell cover calls on it. And that is a key that I will reiterate in every video that I make. That's how you decide on whether or not you're even going to enter a trade to begin with. Do you like the stock? Do you mind owning it? If the answer is, I'm going to be sick to my stomach if I own this piece of crap turd, don't be selling options on it because you will regret it. Now, in this case, again, I wouldn't mind owning it. In fact, I may make this trade at the end of this video. And here's the last part of it. Now, you saw that I had $1.65. We're at $1.63. Do you just buy it at market? No. In fact, I might say, actually, I'll be a little bit happier if I got it for $175. And when I do the math here of 1040, we're at 1.6 return times 68. Now I'm at a 98% return. Okay, I'm going to set a limit sell on this option to go live where that is going to be my ask. And as you see these numbers changing on Robinhood, that's what's happening. As the stock goes up, these numbers go down. As the stock goes down, these numbers go up. So you can not force a trade. You can ensure that you get a trade at a price you like. And this way, if it doesn't happen, who cares? Now, if you're worried about deploying your capital and making sure you get some return, then you may change your mind on how aggressive or not aggressive you want to be. But this is what goes through my mind in coming up with these trades. Now, the last piece about this is it's worth checking out things like the volatility of a stock. And at 50%, that's a fairly volatile stock. However, company that I like right now, Reddit, is, as an example, 92%. And if you want to go really crazy with like Qubit, something like that, a stock that is 122%, that's where things start getting wild, right? And you have to really make sure that, again, you like the stock if you're going to get into this trade and realize that the higher IV is going to pay off better as you look at your premiums. That's basically the math from the market side. So this was a short little video I wanted to make on my thought process. Hopefully that helped you a little bit. I'm thinking about making that trade right now. I might be going back to NVIDIA here as we close and say, hey, maybe it's time to buy that option. And hopefully, again, you learned something. If you got any questions, write them in the comments below. If you're interested in joining the Theta Daddy Discord, check the comments in the description for a link to that. And we'd love to have you there and teach you everything we know. With that, we'll see you in the next video. Take care. Bye.